Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is March 20th, 2025, and we're diving into Shoe Carnival's latest earnings report for the fourth quarter and fiscal year 2024. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Shoe Carnival has been making waves in the retail sector, and I'm excited to discuss their recent performance and future outlook.
Revenue and profitability overview. Let's start with the top line. Shoe Carnival reported net sales of $262.9 million for the fourth quarter, which aligns with expectations. For the full fiscal year 2024, net sales reached $1.203 billion. John, how does this compare to their previous performance?
Overall, Shoe Carnival's sales performance is consistent with expectations, showing a 2.3% increase year over year. The growth was primarily driven by Shoe Station's impressive 5.7% sales increase and contributions from the Rogan's acquisition. However, comparable store sales did decline by 6.3% in the fourth quarter, which is something to watch moving forward.
And what about profitability?
In terms of profitability, Shoe Carnival achieved an adjusted EPS of 54 cents for the fourth quarter, slightly below last year's 59 cents. For the full year, adjusted net income grew to $75 million, or $2.72 per share, which is a positive sign of their operational efficiency and cost management.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies. How did Shoe Carnival manage their costs this quarter?
Shoe Carnival's gross profit margin for the fourth quarter was 34.9%, reflecting a slight increase in merchandise margin. They also managed to decrease their selling, general, and administrative expenses by $2.1 million, which is commendable given the additional costs from the Rogan's acquisition. This efficiency is further highlighted by their strong cash flow of $102.6 million for the fiscal year.
And what can we expect from Shoe Carnival moving forward?
Looking ahead, Shoe Carnival is focusing on expanding their Shoe Station brand nationally. They plan to re-banner 175 stores over the next 24 months, which is expected to drive significant market share growth. Additionally, they announced an 11.1% increase in their dividend, showcasing confidence in their future cash flow generation.
EPS forecast and analyst expectations. John, analysts had forecasted an EPS of 42 cents for the fourth quarter. How did Shoe Carnival perform against this expectation?
Shoe Carnival exceeded the forecasted EPS by delivering an adjusted EPS of 54 cents, which is a significant beat. This outperformance can be attributed to their effective cost management and the successful integration of Rogan's, which provided additional profit synergies.
It's always encouraging to see a company beat expectations. What does this mean for investors?
Beating EPS expectations is a positive indicator for investors, as it reflects the company's ability to manage operations efficiently and capitalize on growth opportunities. It also suggests that Shoe Carnival is well-positioned to continue delivering value to shareholders.
Strategic initiatives and market expansion. John, Shoe Carnival has announced some ambitious strategic initiatives. Can you elaborate on their plans for Shoe Station?
Absolutely. Shoe Carnival is launching a long-term strategy to expand Shoe Station into a national footwear retailer. They plan to re-banner 175 stores to Shoe Station over the next 2 years, which will represent over half of their store fleet. This move is expected to enhance their market presence and drive significant profit expansion by early 2027.
What are the financial implications of this strategy?
The initial investment for this re-banner strategy is expected to decrease fiscal 2025 operating income by $20 to $25 million. However, the company anticipates recovering this investment over a 2 to 3 year period, with re-bannered stores expected to deliver over 10% higher sales and a 20% increase in profit contribution by 2027.
Key takeaways. As we wrap up, let's summarize Shoe Carnival's performance. They reported net sales of $1.203 billion for fiscal year 2024 and an adjusted EPS of 54 cents for the fourth quarter, beating the forecast of 42 cents. The company also announced an 11.1% dividend increase and generated $102.6 million in cash flow. John, any final thoughts?
Shoe Carnival's performance demonstrates their resilience and strategic foresight. Their focus on expanding Shoe Station and maintaining strong financial health positions them well for future growth. Investors should keep an eye on their execution of the rebanner strategy and its impact on profitability.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Shoe Carnival's performance in the comments below. Until next time.